Hey everyone, John Henry here, slingshotfutures.com. Welcome to the daily futures market outlook for tomorrow's trading. Tomorrow being the 15th of the month. This month is just flying by. We're getting a lot of stuff going on. There's a lot of movement in the markets, and things are definitely cruising along pretty well. Now, before we jump into the charts, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you're going to be able to sign up for our email newsletter list to be notified every time one of these videos comes out. Along with that, in the newsletter itself, we talk about all kinds of stuff that we just don't have time to talk about in the video, and that's going to be everything from stocks, options, crypto, you name it. If it's moving, it'll show up in there at some point, so definitely make sure to sign up for that so you don't miss any important information. Along with that, click on the live trade room subscription and trial info. From there, you can register for a free 3-day trial in the live trade room and see what we're all about. It's a really good way to log in with us for a couple days, see how we trade, see how we approach the markets, and be able to ask a couple of questions and just see how everything is going. So a good way to get your feet a little bit wet if you haven't signed up for that already. Now, jumping into the charts, we did have the euro respect that crossing point off of the highs. That was that wedge that we were talking about yesterday, creating a pretty big zone of interest, along with that earlier wedge grinding up that created a crossing point, or what we like to call a kill zone, and that did hold really well. We came into that area, bounced right back off of it, didn't technically physically test it, I don't think. I believe we missed it by just a little bit, but regardless, the market's still obviously respecting that zone and having a very nice bear push to the downside. Now, off of that area, the market pushed back to 23,695. That's that same horizontal support and resistance we can see that's been cutting through the middle of this range for quite a while. And once again, without any surprise, it's acting as support. So as long as we're still stuck on top of this area, we have to assume that, well, the buyers are going to at least give it a shot here. Looking at the bear bars to see if maybe there's enough bearish pressure to try to push down. Really good bear bar. Not so great follow through. Notice all of the wick on that on the inside of there. That's going to make a lot of people nervous. Now that said, they still were able to come off of a pretty big area of resistance. So with that, with that lack of kind of, I don't want to say conviction, but with a lack of consistent one-directional movement, especially, again, considering all that wick inside there, there is a little bit of a concern for the sell side with the buyers trying to press back. Now, we haven't seen any sign from the buyers showing up yet other than one bull bar. Generally speaking, I want to see a little bit more conviction. I want to see the buyers bounce off of that. I want to see a better hold, first of all. So right off the bat, I'm not very impressed by the bull hold. I want to see a wick test like this. That gives me a little bit more emphasis. Now, we are talking about 4-hour zones here, so it's not a specific, line in the sand right there. It's kind of a bracket area, and that does make sense to see the market kind of rattling around inside of there. So really, I think if buyers are waiting for extra conviction, they're going to wait for the first bounce to get the market to go up in their direction, pull back, and then take the second bounce as it rallies to the upside. Now, for the sellers, really, the sellers could be looking at this saying, well, we had a really nice drop. They did have follow through, and it did close on its lows. This one bar might be a discount for the sellers to try to sell and keep that move going to the downside. If that is the objective, we'll know pretty quick because we'll immediately start seeing this go bear mode, especially when it starts triggering above that bull bar's high. So this area right here is going to be kind of a telltale sign. Does the market go up, hit it, and reverse? Or does it hit it and then continue, showing that there are more buyers there trying to shove the market? So it kind of depends on how they respond to that area more than anything else. But, it is something that we want to keep our eyes on because it could give us some clues for future movement. So really, I'm kind of laying more on the neutral side of things right now, just because both sides technically have an argument until we get a little more information. So buy side, sell side, both make sense, and really just kind of treating it like a range, looking to buy low, sell high, and try to stay out of the middle as much as possible. Over on gold, gold cycling off of the earlier resistance at 1328.8. Really nice bear drop off of that area. They tried closing above it, failed, and then came all the way back, tapped it again on the next candle, and persisted back down again. So overall, a decent amount of sell side pressure off of that resistance on gold. And, well, for the most part, even though the buyers are still holding really well off 18.3, there are definitely some flaws, some kinks in the armor, if you will, on the buy side. We're, on the sell side at least, holding resistance at 28.8. We have resistance at 27.5. So a lot of things are kind of stacking up in the same area that are giving us some clues that the sellers might not be done with this yet. Now, that 18.3 area is still an area of interest for sure. We might even be able to migrate that down just a little bit to get some of these low areas instead. It makes a little bit more sense. We derived the original zone off of 18.4, but it makes a little bit more sense now that we have more information to push it down just a little bit, about 10 ticks down to 17.3, holding really nicely inside of that. It doesn't look so bad. Now, for the resistance area, this resistance area was tested. It held really well. It hasn't really broken above it. I mean, it closed above it once, but then immediately failed right back down again. That's not enough for me to really kind of scrap that level of resistance. So I'm going to be continuing to watch that area, especially noting that we have a big area of resistance kind of chopping through there, that orangey, tannish line right there, and that looks like it's still persistently kind of bouncing the market around. So we have two levels stacking up on one another, and if anything, about the only thing we can really add here to gold to maybe give us something else to work with would be a possibility of a rising wedge bottom. That's really about all we have left. On the highs, we could potentially widen this out now that we have more info for a possible wedge top, scrap this channel low since we're probably not going to come back to that anyway, and that gives us an overall larger wedge working down with a potential kind of intermediary wedge trying to hold the market up. Now, a lot of times when you have this type of scenario where overall you have a very nice bear move down, however it ends up looking, in this case actually it's more like this, and then inside of that you have this kind of a counteractive wedge. A lot of times that ends up just being more like a flag where the market pushes down, comes into that flag, rattles around, and then continues the breakout move to the downside. Now, that breakout move to the downside has a boatload of support underneath it, so it's certainly not going to be the easiest breakdown in the world for the market to achieve, but that's kind of what it looks like right now, just given the information that we have. So let's kind of keep our eyes on it, but I am leaning more on the sell side at the moment, trying to get a little bit more pressure to the downside to see if we can get a retest of some of these cheaper areas of interest. Now, in the long run, I'm still leaning on the bull side. I mean, zoom out a little bit and you'll see exactly why. It's hard not to want to be bullish on something like this. It's just a matter of, waiting for the right time. And right now, it just doesn't look like the right time. We're got the nice pullback. They've already trapped below the lows in the bigger picture. That was back in, early March, just when the month started off, and now we're turning back up again. This could just be kind of the rattle before the breakout. So in the long run, I am definitely still on the bull side, but in the short term, I would like to see a little bit more of a dip into support. Over on crude oil, we did have a snap down to retest 60.20 and 60.13. And I mean, literally a picture-perfect snap test on that news. It went down to 11. It went to 60.11. Our supports are at 60.20 and 60.13. So on the 4-hour chart, I mean, it's really hard to be upset by that kind of hold. Just a phenomenal bullish hold off of those lows. Everything that we really wanted to see. The lows of that big bull spike to the upside, along with previous support lows, everything coming into alignment with one another and adding a monstrous bounce off of that, even with inventories, which came out way wrong, by the way. They were forecasting a build of 2 million. API was right around 1.5 or so, and it came out at 5. It's just totally wrong, throwing darts at a board and missing all of them. But, well, that's kind of how crude oil inventories work lately, it seems. Overall, I mean, a nice dip to the downside, huge bull bounce off of multiple levels of support, and this is what we were talking about yesterday, right? We have the rising wedge support, we have doubled up support underneath that, and it tagged all of them before bouncing right back up again. So huge support potential there, and a very nice buying opportunity off of those lows if you were around and watching it. Next area below that's 59.72, never actually tested, didn't really even come that close. It was quite a far away from that, even with the inventories. Overall, we're still holding the inside of the bull wedge, right? The lows are still holding. We have no reason to want to do anything other than really be buyers. But I want to be a buyer on a dip, right? I don't want to buy as it's hovering around inside of here, because you'll notice every time it's stuck around this area, it tends to get really choppy. It held as support as resistance. I don't really want to mess around with this, 60, 90, 61 area. It seems like it might just be kind of asking for trouble. So right now, as it stands, I think the best thing to do is just sit on hands and wait for price to get into a favorable area. Favorable areas, I'm going to be treating it like a range, buy low, sell high, stay out of the middle, and right now we are literally smack in the middle, so there's not a whole lot we can do. I still would like to lean on the buy side. I think it makes more sense given the overall market structure in the location of where we are, but again, I still want to be looking to buy those dips to get that probability a little more in my favor. And then the S&P continuing that bear descent to the downside, not really that much of a surprise at all. We had more continuation lower, and we're looking for the next major level of support. The buyers have been buying this market up the entire time. They are starting to sweat, right? This is the area that a lot of traders are thinking, oh crap, I've been buying along this whole way. I bought down here, bought more there, bought more here, even bought more up here, and now we're starting to pull back. That's a little bit of a concern. So with that pullback, where are stops going to be? Well, probably below the lows of where that big bull blow-off happened, and that is the area of interest. So 27.35 half, rather. I don't know where I got 73 from. That's going to be the big area of interest for a couple reasons. First of all, when the market comes down into that area, there's going to be a lot of stops there. And wherever there's a lot of stops, one of two situations happen. You either get a breakout move, which the market just goes flying lower and we could be gearing up for a move back down to 2,700, or we have buyers, big buyers, right? We're talking the big boys, Goldman Sachs, all of those traders, the ones who have some money. They're the ones that are moving the markets around, you know? They're going to be floating around that area as well, keeping an eye on it. What I'm really looking for is, are they going to absorb all of those stops and bounce the market back up again? Or are they the ones that are liquidating, and that could cause that big spike to the downside? So I'm kind of waiting to see what the response is around that 35.5, and to me, that's an objective to the downside right now. That's what I'm looking for. So with that bear cycle to the downside, everything is looking really, really good to push lower. I'm looking for more selling pressure down. I am leaning on the sell side going into the overnight session, and I want to see the market dip down. Maybe not to 35.5 tonight, but within the next day or two, we should be able to reach down into that 35.5, and that's really what I'm looking for at the moment. So that's going to do it for the video outlook for tomorrow's trading on the futures markets. Now, when it comes to the news, we don't have a whole lot to worry about tomorrow, nowhere near as much as was going on today. We have the Philly Fed Manufacturing Index tomorrow at 8:30 out of the U.S., and that's going to be forecasted at 23.2. The previous was 25.8. That's it. We don't have any other big news. There's no big news announcements outside of the U.S. There's not really much else to work with. So that's all we have to work with for tomorrow. Should be a relatively nice way to kick off the morning. Got some decent movement going on. You know, fingers crossed we can keep that going into tomorrow, so we can get some nice potential trades going at least. I know this morning was really dead in terms of big moves. As it started going into the afternoon session, as always, after we start closing up shop, that's when the markets start waking up and going nuts. But either way, doesn't matter what market you're trading. Like we always say, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.